Fed rate cut expectations drove records gold to record highs yesterday, just ahead of the FOMC meeting tomorrow, which is not that typical. And the record high was at a level we identified also on our weekly preview of the markets published yesterday, as well as in multiple videos before and articles. Of course, this is the 100 Fibonacci extension of that triangle breakout, with next level, of course, being the above the 3,700, being at the measured move high that we talked about several times at 3,800. Now, of course, the sort of round levels in between are going to be intermediate resistance levels in case this rally continues after the pennant breakout. Now, I am looking also, of course, at the reasons that might have happened. Markets are pricing in, of course, indeed, nearly like it's fully priced in the Fed rate cut tomorrow. There is some speculation of a 50 basis point reduction as well, the jumbo rate cut, as we say, but that has actually fallen over the past days. Yesterday, however, and why I think this breakout might have happened ahead of the FOMC meeting, because nothing really changed on the economic front, right? Is there are two events that I think might have pushed gold higher. One, the was a bit of an escalation between US and China following China's accusation of Nvidia of violating anti-monopoly laws. That's the one event. And the second event was that on Monday, the US Senate confirmed Stephen Miran to the Fed's Board of Governors, who is the latest replacement of FOMC. And of course, kind of handing um, President Donald Trump's a kind of a dovish member, if that makes sense. So these two events might have supported the move to the upside. Now, while looking, of course, at um, gold, we might just think that safe havens going up means like risk appetite is deteriorating. But the fact is that Nasdaq and S&P also hit record highs yesterday, right? Which shows that this simultaneous sort of rise to the upside might be just a reflection of a weaker dollar, and of course, the expectations of the rate cut are driving gold prices higher. Now, it will only depend, of course, whether this rally continues on what happens tomorrow with the FOMC. There is a risk for me on a technical level because I'm looking at this double divergence here that has formed on the 4 hour. And we have reached the 100 Fibonacci extension level as well, which is quite strong. Beyond that, we have also just $10 above the 3,700 level. Okay. And again, on the 1 hour, a divergence. This maybe kind of incorporates a lot of candlesticks on the one hand, but still, I think given that we really rejected that move to the upside over here, I would be looking for the 3660 and then, of course, then the 3610 as a very important levels as we following the FOMC. I don't think this move is likely to continue today. Maybe 3.7 if we see a last leg to the upside. But again, this is not, it's probably on the 1 hour going to create another divergence signal, which would actually suggest um, an addition to the risks to the downside, if that makes sense. So ahead of the FOMC, we could be looking for any dips around the 3.66. Okay, if we see that happening, for potential entries, and we would be looking for losses to be just below the previous swing lows. This one, of course, is an important one. And in terms of the upside, we talked about 3.7 and 3.725, 5075, and the 3.8, of course. But if Fed chair, he's even neutral, I might say, because the rate cut is kind of priced in already. Even if the Fed chair statement is interpreted as neutral, I think we might see profit taking um, actually taking place in the markets. Okay. Primary risks, of course, during his speech are an emphasis on inflation persistence, resistance to cutting rates because we expect three rate cuts, one for each meeting. Or we also have the dot plot. So if it is a bit hawkish in terms of inflation, or if even if inflation doesn't, it's not projected to reduce versus previous dot plot, then that might be also, again interpreted as a hawkish sort of risk, if that makes sense. So I am very interested to not just looking at the one side, obviously, I'm also looking at the downside. Because if we do see prices decelerate below that level, then 3 point, let's say if we were to stay at 36890, $20 up stop would be okay, and we would be looking for a potential leg, um, perhaps down to the 61.8. That's the Fibonacci support from the extension, right? So markets are traded on both sides, and with this extended move to the upside ahead of the FOMC, I think, and the RSI being overbought, momentum also diverging, any hawkish surprise for me would be an opportunity to look for downward price action. And the breakout or the retest even of the 3.660 support could be an indication of a further downside.